This is Mark Anthony with Mercury Time Price Analytics, and welcome to our Algorithmic Futures Trading and Risk Management webinar. This particular webinar is being recorded on Wednesday evening, January 8th. The timing could not be better because it demonstrates how difficult, risky, and treacherous it is to trade ES and NQ futures markets without the same mathematical advantage that the institutional machine-driven algorithms have. If you're in a short last night, we had a move down to 31.82 that completely reversed, made a new all-time high. And if you're short, you thought you had a great trade on, and a couple hours later, it was gone. When I do these presentations, I'm not a big fan of static, scripted presentations. So I'm going to dispense with these intro slides very quickly and get into the meat of the presentation. Look, 95% of equity futures trading volume is done by machine algorithms. The algorithms don't care about the things that human traders care about. And what I mean by that is human traders put their stops based on price. Algorithms are based on time predominantly. Price is a factor, but the majority of that algorithm is based on time and not price. If you've ever studied any of W.D. Gann's work, you know what I'm talking about. So what the algos will do is they'll create price zones. Human traders, if they're short, they'll put their stops above those price zones. If you're long, you'll put your stops below those price zones. The algos are designed to create little hooks, run those stops, and then the move happens, and then you're chasing it. So understand, first and foremost, that time is the most important part of the equation. Look, you can go on the internet, and hundreds of different websites will give you mathematical price pivots, and they don't work. And the reason they don't work is because they don't have the time component, the time cycles that institutional algorithms are based on. I'm going to get back to that point in a minute, but here I've got just a basic 10-minute SPY chart with Bollinger Bands. Now, when you look at long time frames, not 10 minutes, but the longer time frames, when you get this type of compression in Bollinger Bands, you know something's going to happen. But how do you trade it? If you're, do you get short here? Do you get short here? Do you get long here? I mean, where is the pattern here? Another example. If you use VWAP, volume weighted average price, well, that's a pretty binary indicator. So do you get short when it crosses beneath it? Well, you get short and then it takes your stops, and then you get long and it takes your stops, and back and forth and back and forth and back and forth. You're chewed up all day long. You're frustrated, in many cases losing money, because I've done that. And at that same time, the institutional algorithms are making money. Now, I'm going to jump to the price chart in a minute, but would it be easier if you had algorithmic mathematical pivot lines on the chart? You can see the support and resistance zones. You don't have to guess. And by the way, we never, ever manually put support resistance lines on our charts, ever. Every horizontal line on every chart that we put out for our subscribers is a mathematical algorithm, because the algorithm can go back and look at minutes, hours, days, weeks, months of price data and put the support resistance zones, as well as our proprietary pivots that bisect congestion zones. And what I mean by that is, here you've got a price acceleration pivot. I'm going to show you this in a minute. It bisects this support resistance zone. Why? Because you've got stops here, you've got stops here, and when you break down through the middle of it, boom, you've got air. And I want to show you exactly what I'm talking about. Here you've got January 7th. Here you've got January 8th. There's two pieces to the puzzle. You need something that indicates the optimal entry based on a time price algorithm. That's what this oscillator is. The second part of it is you have to have algorithmic pivots to show you places to take profits, places that price is going to bounce. And that's what these horizontal lines are. So our algorithm got short January 7th, a couple hours before the RTH opened, 32.48. Stayed short from bell to bell. More importantly, it stayed short into Globex, where you had this. Now, the pivots on this chart, these have already been updated for January 8th and tomorrow, January 9th. But I want to show you this same move with our algorithmic pivots. So when RTH closes, we take all the data for that day, we put it into our algorithm, and it gives us what we call Mercury bands. That's what these algorithmic levels are. We've got short cycle bands, long cycle bands. After the algo creates them, we put them overlaid on the chart. We post this on our Slack channel for our subscribers, but more importantly, we have a live chart feed on Zoom so that our subscribers can see the real-time price action, know where the pivots are, know when the oscillator has triggered entry. Here's the problem with most automated systems. They'll define an entry and then they'll define when they flip long. Well, take our algo. If all we gave you is entries and told you when it goes short and when it flips, well, the algo went short 32.48, flipped back long right in here 32.20-ish. Well, that's 28 handles, which is nice. But by having the algorithmic pivots, it allows traders to take profits as all these levels break. You could have taken profits here, 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 here. Now let me pull up a screenshot of what those pivots looked like yesterday. So this is the morning action. I'm going to come back to this chart in a minute, but let's just jump to the chase. Cut to the chase. Wrong metaphor. So in Globex, we had this move down. The algo's still short. There's traders in our chat room that subscribe to our service that took profits here within a handle or two of this extension, which was put on the chart the night before. Now, how did they know to do that? Because if this 32.26 level breaks, this is what we get. Well, how do we know that? We put out another set of pivots in the morning. And I've yet to see anything in the industry that does this. We call these dynamic pivots. We put these out about half an hour before RTH. And the difference between the Mercury bands and these is these dynamic pivots have names. And the names identify the characteristic behavior to expect from price action as it interacts with these levels. So here's that short I was talking about, 32.48.75. Now these orange pivots are trend indicators. We have our trend confirmation pivot. We've got our back test pivot. And so when price came down here, it broke through, and that's your first indication that we're likely going to see some downside action. Price comes down here and stops. It stopped exactly at our trend change warning pivot. So when you have a strong uptrending market, and it comes down into a trend pivot, a pivot that's going to change the trend that day, well, you get support. Now, where did it bounce up to? It bounced up to our daily bull bear pivot for ES, which is 32.44. This daily bull bear pivot is calculated over 2 hours before the market opens. This is a single line of demarcation for trading that specific day. So you had a break of the bull bear pivot. You came down here into the trend support line, and it came back up, and it stopped to the tick at the bull bear pivot, 32.44. Then it comes down again, stops at the back test pivot, comes back up, stops at the back test pivot again. Now, we also put multiple price acceleration pivots on the chart. Here you have price acceleration pivot number 1. Here you have the tick acceleration pivot, and this is the big area I want you to keep in mind. This price acceleration pivot 2, which yesterday, January 7th, was 32.26.98. So here's your initial move down in the morning, bounce back up to the tick to our proprietary bull bear pivot, and then it starts to drift off into the end of the day. And right here is 6 p.m. Eastern time. This is the move in Globex. Now the initial spike down came right down to this acceleration pivot. Well, what happened after that? Why do we call it an acceleration pivot? Remember, that's 32.26, 32.26.98 to be exact. Then you got this. And where did that happen? Right here, 32.26. When 32.26 broke, right here, price acceleration pivot, identified before the market even opened on the 7th. when that 32.26 price acceleration pivot broke, boom. Now, we have a Slack channel, and we also have a live chart feed on Zoom. So our traders can see the chart in real time on the Slack channel, or on the live chart, forgive me. And I've got traders that took profits within a handle of this 31.96 and then took their position off within a handle or two of 31.82. Now I want to show you, these were put on the chart the day before. Here's a screenshot of what we put out on our Slack channel for our subscribers before the Globex opened on the 7th. We put this on our Slack channel so our traders know the pivot levels, and the two that I'm talking about right now are the two lower extensions, 31.96 and 31.82. They knew that going into Globex. We also provide our traders in our Slack channel a chart overlay. So not only are you seeing the chart in real time on Zoom, but we give you this chart overlay that has all these pivots laid on there, so you know where these levels are before they happen. Now we got this bounce up. I had traders who were short, who covered the short here and got long at 31.85. Now everybody in our Slack channel took profits way too early on this flip long. But you know, it's one thing to identify a trade entry, but the thing that would always drive me crazy as a trader, and I've been trading for over 30 years, what would drive me crazy is trying to figure out where to take profits, because no matter how accurately I took my profit, I would always beat myself up if I took it too soon and left money on the table. That doesn't happen. As these pivots start to break, you know that as each one breaks, it opens up the next one. And so as these lines break, you could have put a order in to take profits, and you don't put the order in to take profits exactly at the level. You put it a handle or two above it, and boom. And so you got this move down, which stopped right at that 31.96, bounced back up to 32.07-ish, 08, and then came down, broke that, and then came down to this pivot right here. So it takes the stress and the anxiety out of trading, because you know when to get long, you know when you know, in this case, when to be short, you know when to flip long, and you have these roadmaps to show you where to take profits. Now, let me go back here, because what's interesting is the oscillator was short from bell to bell, and then around 10 o'clock it flipped, and it got long 32.26. The trigger was right here on this price bar, but at the time, the earliest you could have got in was right at 32.26. And then you saw we made this new all-time high. Now, I'm going to pull this chart back, and we're going to go back to, there's only so far I can go back. So we're going to go back to Christmas Day evening Globex open. So let me expand the chart, and then we're going to go back to so here's Christmas Day. This is the Globex open. Look what happened on the open. The algo got long right off the open, which was around 32.27. Okay, it stayed long all throughout Globex, and it stayed long into the close that day. So long from 32.26, we go out at the highs 32.44. Now let's take a look at the next day. So the system was long from bell to bell, even starting in Globex. So let's go to the next day. So the system was long down there at 32.20-ish. It stayed long all the way up until 32.51. And then it flipped short. But here's the other thing I want to point out to you. Where did that move stop? Forget for a minute that the entry oscillator is on the screen. If all we gave you were these pivots, look at how accurate that is. 32.54, 32.54.28 was the pivot. That's within a couple pennies. So now the system flips long on the 20, or flips short, forgive me, it's been a long day. System flips short 32.51.50. I remember that specifically. So you had that move up, then it flipped short, and what happened after that? ES comes back down into 32.35. So the previous day, the algo was long from bell to bell. The next day, it was short from bell to bell. Now let's look at the next Monday. So here we get the Monday open, December 30th. System is short right off the open, short from bell to bell. Now, you had trade down here to 32.16, and then you got to bounce back up to 32.31. Well, that again is where these pivots come in, okay? The pivots are there to give you an idea where the most efficient place is to take profits. So again, system is in the trade from bell to bell, in this case short. Now let's go to the next day, New Year's Eve. This day we got a little bit of two-way action. So the algo is short 32.26, trades down to 32.12, 13-ish. And where does it flip? Right after 2 o'clock, 32.21. And then if you were trading on New Year's Eve, ES ramped into the close, which was fairly predictable. So short off the open, down here, system flips long, stays long all the way into the close. Getting the idea? Now let's take a look at the next trading day. And when it got long here, by the way, notice it stayed long all the way back up to 32.48. It got short. Now, where did it get long again? Okay, so you're long up to here, 32.48.49. The algo flips short. But where does it get back long again? 32.42. So it flipped from long to short here. You book a couple of handles because it came right down into the pivots. And then it got long again, 6 handles lower, and stayed long into the close. So now we've booked those handles. Now let's go to the next day. So here we have the 3rd. Then the algo flips short again, 32.56, short from bell to bell, all the way down. You were up here at 32.61, 62, got short 57, and the low was made at 32.06. Then the algo flipped long, 32.24. You had this move, and then short again. And you have the ability to take the meat out of the move, because as the algo is long or short, you've got these algorithmic pivots to, again, show you ideal places to take profits. And like I said at the beginning of this video, if you were short yesterday, you had a lot of handles on paper, but if you didn't take profits, boom, they took it all right back. And I think we're going to see a lot of that in 2020. Sharp spikes down, followed by very quick retracements back up. And just a couple more days to show you. I just want to show you the continuum of how accurate this system is, because it is built on time, not price, just like the institutional algos. So here the system short, and it's short down into here, 32.16. This is January 6th, so it gets long again right here. Now, this was the opening bar on Monday the 6th. So, and notice the system didn't, it didn't get you long up here. It got you long after we had this, and then on the next bar it got long, okay? So it was 32.19. The system gets long on Monday the 6th, and pulling the chart forward, it stays long into the close. Now, bring it back up to yesterday. This video is being recorded on the evening of January 8th, and here's where we started this. Algo gets short, 32, where was it? 32.48.49. Got that whole move all the way down. You're taking profits using the horizontal lines, the algorithmic pivots, and then the system goes long again. And really, that is the secret. You have to have both. You have to have the algorithmic mathematical entry oscillator. And I mean, yeah, the entry is important, but risk management, where you take profits, I mean, like I said earlier, if you're not taking profits, it's a paper profit. Once again, 32.66, where did we get the high for today? Right there. Now, I want to show you how the algo finds these support resistance zones. So let me flip over to this chart. This is a longer term cycle. What you see on the charts, these are the Mercury bands that we ran after RTH today that applied to Globex tonight as of this recording, January 8th, and apply all throughout RTH tomorrow. So remember, we had that fast move down. So here are your lower extensions. Where is the algo getting this from? Well, let me pull the chart back and I'll show you. Remember, we're looking at these two red lines here. See this price congestion zone right here? Pretty accurate, huh? To the tick. Now watch what happens when we pull it back even more. Look at this. And these are the bands for tonight on the 8th. Forgive this gibberish here, but I wanted to pull the chart back and show you. You can see how tight that is. So the algo finds where these, now here you've got a support resistance zone. Now if you look at these lower levels, these levels cut right through these congestion zones, and it's literally this accurate every day. The reason we give a free trial is you have to see this in action to believe it. We give you a 7-day free trial. You can go to our website, which is mercurysignals.com. Sign up for a free trial, 7 days. We're running a 62% off special right now. We're not going to have that special in effect much longer. We bill weekly, not monthly. Why do we do that? Because if you don't like the service, I want you to be able to quit anytime and not be a day or two into a new monthly billing cycle and decide you want to quit and you're locked in for that month. We don't do that. That's how much we believe in this system. You get a 7-day free trial. We don't do the billing until after the free trial is over, and you can quit anytime. But not only do we let you quit anytime, but we give you a lifetime rate lock, so you get the best of both worlds. We never raise the rate on the package that you buy from the price that it was when you bought it. So if you sign up today and the price is X, we lock in that rate for you forever. You can quit anytime. You get the best of both worlds. I think that's really about it. I could go on talking about this for much, much longer, but I just urge you to give our service a try. You have the live chart where you can see the oscillator all throughout the day, all throughout Globex. We give you the Mercury band pivots at night. The Mercury bands, by the way, these have some wide spaces between them, and that's one of the reasons why we also give you the dynamic pivots in the morning, and that gives you more granularity as to how to trade it. And whether you're a day trader, a swing trader, or a position trader, look, there may be a system out there that's more precise, and I'll never make absolute statements that this is the best or that's the best. If there's something out there that's more accurate than this, both in terms of the entry oscillator, algo, or these algorithmic profit capture pivots, go to our website. You can click on the contact link, send me an email, markanthony@mercurysignals.com. If there is anything consumer level or institutional level that is more accurate than this, or you want to test your system head-to-head against ours, we'll do that any day of the week, any month, anytime. markanthony@mercurysignals.com. Our website is mercurysignals.com. Please give our system a test drive, and I think you're going to be very happy that you did. And so with that, we're going to conclude our webinar. Thank you so much for watching this. Feel free to share it with a friend. In fact, we hope that you will. God bless you. God bless your family. We hope to see you again soon.